Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site, we have Andy Baehr, Head of Research and Index Product Development at CoinDesk, Rettig, COO and Chief Legal Officer of Jito Labs, Michael Durette, Managing Principal and CRO of CRC Oyster, and Andrew Lom. He's U.S. Head of Financial Services and Global Head of Private Wealth at Norton Rose Fulbright. We're here to discuss 2026 priorities for market structure, legislation, and regulation in the digital asset space. It is great to have all of you with us. Welcome to Trade Talks. And Andy, we could have just named the segment Market Structure, and everyone would have known what we were alluding to.
It's great. It's been a great year for the slow money, right? The fast money has had stumbles. We were talking about our respective children in the pre-show, right? It's hard not to think of top tokens as our children. We kind of want them to do well. Yeah. We want to be able to say nice things about them to other people, and it's been difficult to do that since early October. But in the meantime, M&A, legislative process, the kind of connectivity our firm and other firms are having with legislators, with regulators, has been fantastic and unimpeded. So we think that it'll be a breakout year for integration, for better market structure, for better, safer products for retail to use, and the U.S. is leading the way. So although it's been a kind of a heartbreak market condition since early October, we feel more bullish than ever about the progression of the asset class.
Yeah. And Rebecca, let's take a step back here for a minute. What does meaningful U.S. crypto market structure actually look like? And what are some of the current gaps?
Great question. One thing I want to say, just keying off of what Andy was talking about, is that price seems very uncorrelated from sentiment. Yes. In many ways, both on the builder side. I just came back from Solana Breakpoint, which was a 7,000 person conference in Abu Dhabi, and I think sentiment was unpeded there. Everybody was still building and moving forward. And on the legislative and policy side, that was, of course, a meaningful discussion. And you're right that the U.S. is leading the way. For market structure legislation, we really need something that can marry what the SEC believes it has jurisdiction over, what the CFTC believes it has jurisdiction over, and how to move this forward meaningfully so that the sentiment can continue and people can continue building. Obviously, we've seen a huge institutional push in the last year, but there is still some uncertainty around how things are going to play out. I think the biggest questions remain about DeFi, or decentralized finance, and we have seen, even very publicly, the traditional financial firms, Citadel and others, coming in to talk about what DeFi looks like and who has jurisdiction, as well as ethics and some other big issues.
Yeah, and Michael, it's a great point that Rebecca raises, because financial institutions are increasing the pressure to engage with digital assets. It's got to be a challenge, because again, in such a heavily regulated space like financial services, there's a lot of issues at play here.
There is, and we were talking about it actually earlier. When you think about what's happening, they are lining up, they are using everything that they can to get ready. But the question is, when do they start? Right, and that's where you need the true legislature to be able to push through. Right, the Senate Banking Committee just pushed off until 2026. They were supposed to kind of issue some comments over the next couple of weeks, and they said we're not going to come back until January. Right, so I think it goes to what everyone is saying, which is everyone's working on this together, but we have a really short amount of time that they have to be able to get it done. Right, so if you're the OCC or the Fed, right, and then you're the financial institutions, it's the partnerships, it's building it out, and that's the question: is they're ready? They're just waiting for that okay from the regulators, and we're not there yet.
Yeah, and I think, Andrew, one thing that's important to recognize when you look at the Genius Act and the Clarity Act, it doesn't give you this overarching blessing, right? But it does help to define where some of these lines are being drawn.
Well, sure, right, and so the Genius Act, that's really about stable coins. Clarity Act is really about market structure. I think a lot of people saw the Genius Act and thought it was everything, especially the Genius Act, because that was, just the excitement of the time. But even with the Clarity Act, if, when, how it passes, we still need clarity. And banks, broker-dealers, regulated financial services, they want some amount of certainty in what they're doing and how compliance is supposed to work and how they're going to interface with some of the technologies, some of the innovation, as opposed to DeFi, where that's really been inventing things. And there's whole sections of the DeFi community who just don't care what the rules are because they're going to do it anyway.
Oh, I don't know if I think that is true. I think that is a terrible, I think that's a terrible narrative around DeFi. I think the question is, what is actually DeFi today versus what is on-chain finance that is masquerading as something else, and where are the lines drawn and the guardrails put in around those things. And so DeFi is not the Wild West like people still like to think about it, but I think what we define as DeFi now versus what it was originally contemplated as, like much of what Bitcoin is, like permissionlessness, decentralization, things like that. Where are we on that spectrum today, and where do we actually put rules and guidance in place around that?
I think it's also interesting just because 2026, you're seeing, and we're having these conversations, DeFi is coming into TradFi. And we know that TradFi is moving into DeFi, but because of the structure, because of the legislation that's being put through in the US, under Chairman Atkins and then looking at the CFTC, you have all these DeFi firms that are lining up to get into the traditional finance side of it, right? And so that's going to be very interesting to see how that plays out in addition to other players and entrants into the space.
And how we do that, right? Like how do we trade tokenized securities in a permissionless protocol where anyone can build, a liquidity pool for these securities? How do we do KYC? Do we have permissioned pools and permissionless things? So these are very, very complicated questions. And to bring it back to market structure, I don't even know if that is regulation ready yet. Most other countries around the world have put in their centralized market structure in place for centralized exchanges, OTC dealers, things like that, and have said we need to study DeFi more because we don't know what to do with this because it is so different for true DeFi things.
Yeah, but there's a couple things at play here. A lot of other countries were able to leapfrog because they don't have legacy institutions and regulation in place like we do in the US. And financial services of all industries, Andy certainly has battle scars when it comes to regulation by enforcement.
Yes.
And that's why there's just drive for policymakers to be able to execute on this.
That's right. The legislative process doesn't need to be entirely prescriptive, but it does have to have people wake up and go for a run rather than check their emails to look for Wells notices, before they sort of have their morning coffee. So people need to have a sense that their growth, enterprises are going to be supported. But I agree, there's a long way to go, right? I mean, Jill, you and I have talked many times, like one of the legacies that we have from the financial crisis was still split regulatory function, right, with CFTC and SEC. And CFTC doesn't touch that many retail people right now, right? Not a lot of people with futures contracts. So if they're going to end up overseeing spot crypto trading, whether that's in a brokerage account, which would have to not be called a brokerage account, or in a native account, that's a tremendous amount of staffing. I haven't heard anything about SROs, which are kind of foundational in traditional finance. We haven't heard a whisper about that in newer finance. We know that the CFTC gathered a bunch of CEOs of exchanges, including our parent company CEO, Tom Farley at Bullish, to sort of start to think about these things, but it seems miles off. In the meantime, the asset class and trading and how do we protect retail thing is happening on that side. The collateral management, payments, stable coins, tokenized money market fund rails, and how public or semi-private those blockchains should be, that's making incredible progress. So right, that's what we call the boring plumbing stuff, but that's actually going to advance things, and hopefully for platforms, blockchains like Solana, and for protocols like Jito Sol, and for Ethereum and other layer ones, that will start to kind of get people more informed about how these can add value, and that helps the asset class.
It certainly does, and Andrew, you bring this up in your notes as well, that you want clarity without overreach because you want pro-responsible innovation.
Well, right. So we don't want the Wild West, and there's plenty of DeFi that is trying to behave as best it can, like TradFi, of course. I think it's important to understand too, when we talk about digital assets, there's cryptocurrency, there's all sorts of other things on this spectrum, and then there's using blockchain as the ledger or the record-keeping system, for all sorts of other stuff that is actually quite mundane, boring, the piping. And I think what the industry is looking for is a set of rules or legislation, probably not court cases because those can always get relitigated or reinterpreted, but rules to let you understand where you are in that spectrum and then move comfortably from the different implementations of blockchain in your universe with that level of certainty that a regulator is not going to come down on you and shut down your entire business.
Right.
plan.
Well, Rebecca, let's put you on the spot for a moment here.
Okay.
You're Chief Operating Officer.
Yeah.
You're Chief Legal Officer, that dual role. Why do you think market structure requires the legal side of this as well as the operational clarity?
Thanks. I've been thinking about that actually as we were leading up here because there is, much like in the traditional financial world, the regulatory side is so deeply embedded because you are building financial plumbing in many ways. And to key off something you were saying before, even things like OCC interpretive guidance for banks, people don't believe it because the swings on the regulatory front have been so violent, for lack of a better word. Yeah. And so you need at least the market structure legislation in to give people comfort that there isn't going to be another swing the other way. I think you need to build out your business operationally with some of the legal in mind. Obviously, you should not build only towards the legal, but you need to understand what the framework is to be able to create plumbing that the traditional financial world feels comfortable plugging into and can create very much new primitives in many ways with.
Yeah, and I think, Michael, part of the challenge is too, like, let's talk about tokenization and stablecoins as an example. Who examines this? Who redeems it? Who holds these assets? Where's liquidity being sourced?
Yep. And those are all the questions that the regulators are asking, right? And I think to Andy's point, you need that information, you need to know that, but everyone's kind of sitting around a table trying to figure it out, right? And so it's very hard to advance and move forward when you don't have the clear infrastructure and you don't have the clear rules and regulations on how to do it, right? And I think that's part of it too, right? And I think what Andrew was saying, you have financial institutions, right? And you use Citigroup as the example. Jane Fraser came out a couple of weeks ago talking about their use of blockchain, moving assets from the US to Asia, and really kind of being one of the first financial institutions to do it. I mean, it's very hard to put the genie back in the bottle, right? But you need the regulatory clarity to be able to jump into the space because I think, Rebecca, to your point, right? What has happened in the past is firms jump in and the regulators come in and slap them and then they shut it down, right? And so all this work that is done over the last couple of years in the US, really 2026 is really about getting the actual structure in place so that the US can thrive and not be a third or fourth adopter as they've been over the last decade or so.
Yeah, I mean, especially for the industry overall, once the US adopts this, that's when scale happens. I mean, we saw that happen with the Genius Act.
We did, and I just, the two most boring examples of all this, just collateral management and retail payments, are the things that always give me hope and heart. Clearly, big firms have picked up the scent that collateral management. JP Morgan, said that recently it will start to take certain cryptocurrencies as collateral. It also launched an Ethereum-based tokenized, money market fund, which would primarily be used for collateral enhancement. So just those two things, right, will keep blockchains very busy about working on speed, efficiency, and market share. You have to give something back to the investors who want to have an investment thesis to own a bunch of digital assets beyond Bitcoin, right? Bitcoin's investment case is super clear, but super unique and individual. People really haven't had a sense of why should I own Ethereum long term, right? And how can I connect the price of it to its activity, to its adoption, to its network activity, to its staking rate? How do I think about that? These narratives around these really kind of boring plumbing things will, I think, help a lot. And right now, I think that we have sufficient regulatory support for things like, well, we're going to take USDC as collateral, or we're going to take these set of tokenized money market funds as collateral. I think we're kind of almost there, both on the over-the-counter level and with some major exchanges. Once that starts to tip, I think more and more floodgates open, right? It starts to accelerate. More firms will pick up the scent. And then you'll just see a lot more stablecoin balances. You'll see a lot more activity on Solana and Ethereum and Avalanche and Canton and all these other semi-privates. And the narrative will evolve. And then retail will become better informed. I think they'll become better investors, better for the asset class, and regulation will just kind of have to keep up.
Right.
But in the meantime, there's plenty of ways to buy, and there will be plenty of ways to buy into the asset class, which is, I guess, what we care about, right, as index providers. We want people to think that the asset class is definable and benchmarkable and safe and investable and worthy of people's attention. And, in a way, we're kind of there. In another way, we're hoping for a lot more.
Yeah, so Rebecca, is there a risk of hinging everything on the Clarity Act? What about, the promise of yield, custody at scale, payments, cross-border flows, and so forth? There are other areas, outside of the Clarity Act where some of these regulations are somewhat in place?
I was going to say the exact same thing. Like, I think we have a lot of what we need to do specifically on the financial side. Like, we know what to do with tokenized securities for the most part. They operate like securities, especially even just taking certain types of digital assets as collateral, which we know are commodities in many ways. That I think people can move forward with and are. And to the it's hard to put the genie back in the bottle point. I think people are going to keep inching towards it because the work is still going on behind the scenes on market structure. Sure, the Senate Banking Committee said, fine, we're going to postpone a markup, but nobody's stopped working. I mean, people are kind of chained to their desk, both on the industry side and on the Senate staffer side and things like that. So people are still doing the work. And I think we're going to keep moving forward. And we need clarity for certain types of things, like you're talking about trading tokens and when tokens fall on the commodity side of things and are being traded as spot versus when they're part of a broader securities transaction. So for token price movement, we may really like to see something like market structure legislation, but for a lot of what people want to build now, including things like using liquid staking tokens like Jito or whatever as collateral, which are totally new types of yield-bearing primitives in many ways, I think you don't necessarily need market structure legislation. You just need good guardrails and people who want to do the right thing.
And you're getting it from other sources too. So, you know, there's the Uniform Commercial Code amendments that have been working their way through all the states, you know, one by one. That's been going on for a couple of years.
Because it's too easy otherwise, right?
Well, right. The Uniform Commercial Code is not uniform.
Right. Yeah.
But as states are adopting that, that's another, you know, we've been talking a lot about, you know, regulation, CFTC, SEC. There are other pieces to this. And so having, you know, state collateral law comfort around some of these assets is another important piece that you basically need. Even if the regulator tells you you're allowed to do something, now there's, you know, the practical enforcement of the collateral interest on whatever it is, or, you know, some of the operational issues about how you go and take possession of the thing that's been pledged as collateral, and what does that mean for wallets, and some of the other, you know, apparatus, you know, around these assets.
Yeah, because Michael, you don't want to fall under analysis paralysis, where you're not keeping up with the investments that are required for the structure itself, compliance, upskilling your workforce to be able to, you know, not only work with the technology, but understand what's coming to market in terms of regulation.
That's right. And I think the advancements in technology over the last several years are just moving at a rapid speed, right? And so the regulators really need to step in here, and it doesn't matter if it's the OCC, the Fed, the SEC, the NFA, the CFTC, all of them have to look and say, where is this going over the next couple of years, and how do we put in the framework to be able to allow for this innovation, right? And you hear it from Chairman Atkins, right? And you've heard it from Commissioner Pham, right? And you hear that specifically talking about this is where it's going, right? When they're saying that tokenization is going to happen in 2 years, right? From Chairman Atkins, they need to put things in place right now and structure so that organizations, institutions, financial services players understand what the rules are and they can adopt, and that's where the technology gets to your second, third derivative. And that's really what I think is important, is that everyone is working to get things done, right? They didn't put pencils down because they said they're going to come back in January, but we have a very small runway here in the US. Midterms are coming in November, right? So there's about 11 months where they can get a lot done, which then sets a precedent for the next several years.
Yeah, which is interesting, Andy, because sometimes when you see movement in Bitcoin or the digital asset space more broadly, is that risk on or risk off sentiment, where I think some of the issues within the digital asset space are idiosyncratic and really related to what's happening in terms of advancing regulation.
I'd love to see more idiosyncratic movement. Right now, the correlations are still pretty high.
But I think to say that it's risk on or risk off, for the market in its entirety, I don't think that's
right.
a good
No,
assessment.
it's true. It's true. And it's funny, I was having a flashback to even before the financial crisis when credit derivatives remained underregulated and there was no begging for regulation there, and you still had the problem of the dual regulators kind of outfielders in the baseball field deciding who was going to catch the ball, and nobody caught it and fell to the ground, right? It's funny how times change. Now this is a retail phenomenon and everybody's begging for regulation. So kind of funny. I think we would like to see, to answer your question specifically, we'd love to see Bitcoin pull away from everything else because Bitcoin really has the least to gain from a lot of these advances, right? It's kind of on its own. I think collateral management and ease of leverage and accessibility of yield are possible advantages that Bitcoin can have. But aside from that, there's 12 different ways to buy Bitcoin. We don't Bitcoin is fine. I think we need reasons to engage more with layer ones and attach their value proposition more to their activity. And then we need to iterate, I guess, on the SEC generic listing standards so that there's a more broad and inclusive framework, so liquid staking tokens aren't kind of randomly penalized, so that investors can have a security wrapper around digital assets, both on an individual and an index level. So that's market structure stuff that will help. It was great to see over the summer as the market was doing well, correlations among assets started to finally drift lower into the 0.8, 0.7. That's great. So that'll be another sign of the maturing market. We hope that that evolves more next year.
All right, appreciate everyone's insight. Thanks for joining us on Trade Talks, and thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.